Folks, we're heading into the final hour of trading, and right now Lowe's shares are down more than 1% in tandem with its bigger rival Home Depot, where it's cut its sales forecast. So what does this mean when they report tomorrow? I want to bring in Mahoney Asset Management President Ken Mahoney. So, the interesting thing is if Home Depot is not an indictment on the consumer, but they've got some company-specific issues, and the gap between Home Depot and Lowe's is as wide as it's ever been in terms of, they used to trade in tandem. Right. Would Lowe's be worth a shot going into the close ahead of earnings, or is there still too much risk?
It's hard to say. I hate to jump in front of earnings. I think you're like 50-50 in those type of things. But it's very interesting. Home Depot, in their forecast, are kind of saying that Lowe's is taking on market share. So, again, it's surprising they're both down. But I have to say, though, look at this. In other times, though, Home Depot's down, it's conviction on the consumer. But now we have a really nice market, and it's not, you don't go to that translation. Because other times you wake up with Home Depot down 5%, you're waking up with Dow futures down 100 to 200 points. So it shows there's a little disconnect there.
Well, there's also a company, though, that's missed the same store comp sales 4 quarters in a row. And if you go back to the last 7 quarters before this one, the stock was down 5 of the last 7. So right. The reaction to earnings has not necessarily been great, and yet the stock came into the day at an all-time high. Right. So, I think it's one of these names long term. You don't touch it, do you?
No, I don't think so. Again, like I said, I hate to buy in front of earnings. I think it's more like.
So what about? Let me ask you, Target, because they're reporting. The last report, the stock was up 21% in this session alone. Right. I feel like I made a mistake. I took profits that day. It was amazing. It was wonderful. We made 50% on this stock that many people gave up on, and I'm feeling buyers
remorse. Come on,
sellers remorse.
Sellers remorse.
I'm feeling sellers remorse.
Well, you did a good job buying.
I feel like I should be in Target going into the earnings.
And they're executing very well. I mean, that really was a surprise. I mean, that was a blowout quarter. Again, as you mentioned, it gapped higher and just kept going up from there. And I think there's some short covering that happened with that name as well. Because remember, we said retailers are dead, and yet some are executing. And by the way, Target had about 25% top-line growth for online sales. So they're catching up with the Joneses, so to speak, in that space.
Well, these companies, Targets, Walmarts, they've been able to perfect this omni-channel thing where, you buy stuff, you go pick it up there.
Brick and mortar.
Traffic is up, transactions are up, and they've got pricing power. Those are the 3 golden things for any retailer. But obviously some companies don't have it. Kohl's is a major loser today. Yeah. So you'd still have to be very selective.
I think so. And by the way, there's nothing having a trailing stop. So to your point as buyer's remorse, seller's remorse in that stock, there's nothing wrong putting a stop loss order in. Stock moves up, eventually, comes across. You get stopped out. But at least you put a sell discipline in it. And that's the way I would trade some of these names, with a trailing stop loss order.
NASDAQ has been up all session long, and it's being powered by technology. Right. And it's not the names that we talk about. Amazon is still almost 300 points off its all-time high. Yeah. Semiconductors have been amazing. Software stocks have been amazing. Right. Can they keep this going? Because now people are talking 2000, 2001 all over again.
It does remind me like a really strong basketball team where someone in that night scores 30 points. Next night, someone else steps up and takes the leadership. I feel technology is like that. All of a sudden, software stepped up earlier in the year, and that was Microsoft and Salesforce. Now you have the semiconductors stepping up. And then you have, as you mentioned, some of the other kind of industries.
Are you afraid, though? Are you nervous? Or are they frothy? Or ride this wave?
Yeah, so I don't like this. Again, I'm going to ride the overall technology wave. XLK is our favorite. We buy that on dip. Now, look, it's a little bit Apple, a little bit Microsoft-centric because of the weightings in XLK. But that's been my go-to on the buy the dip XLK.
Monday I talked about buying these broken IPOs. Smile Direct is up 10% today. I'm not touching it, but would you touch any of these broken IPOs?
Well, if you're not touching it, I'm not going to touch it, Charles.
All right. It's on my watch list, though.
Okay, exactly.
Ken Mahoney, thank you very much.